The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to this Thursday webinar here at Nadex, where I will be discussing knockouts, binary options. I'll even touch on call spreads, and I'm definitely going to be sharing our platform. I hope everyone is staying safe out there in these crazy times. I also hope everyone is staying sane. I know my sanity is being tested, but things are starting to open up here in Chicago. Hopefully, things will calm down for wherever you are. This is the last trading day of the week with the holiday tomorrow. So thank you for joining me today. My name is Todd Rich. I am head of education here at Nadex. And before we get into today's session, let me do a quick housekeeping item. I always need to put up our disclaimer slide from our compliance department. This webinar, as are all of our webinars, are brought to you by our compliance department. And it is important to note, I don't want to make light of it, that trading anywhere, including Nadex, does involve risk. So it should be capital that you can put at risk. The other thing that I would really like to point out is that I am doing this for educational purposes only. I will be looking at live markets today, and it's important that you do not construe anything I say today as a buy or sell recommendation. This is strictly for your educational purposes. All right, now, what do we, you know what, I'm going to put this up briefly. This is to let you know that we do have a lot of help here at Nadex. You have ways of reaching out to us, but I am actually going to show this in a better way in a few seconds when I jump over to our website and then go to our platform. And what I'm going to cover today, I'm going to cover knockout options. If you're not familiar with the term, I'm going to define it for you, and then I'm going to show you. I'm a big fan of showing. I think when you see it, particularly on our new platform, the concepts become very clear. And how you could potentially trade these products based upon your own opinions becomes also a little bit more abundantly clear. I'll probably transition a little bit from knockouts to call spreads just so you can see the difference, and then we'll wrap up on binary options. The whole time we will be playing with the new Nadex platform, and we will definitely be playing with the charts. It's the keystone of the new platform, and we've really upgraded our chart functionality for you to be able to do your own research and analysis right there on the platform, so you can set up your trades the way that you want. All right, with that, I am going to, let's get this out of the way. I am going to, where are we now? Let's see what I'm sharing. And, this is also important. Here we go. I'm going to share this. This is an interactive session. So if you've got any questions as you go along, type them into the questions box. I will do my best to answer them as we go, but I might not necessarily see the question as I'm going. I will definitely take a peek at the end and try to address questions that I may have missed. So please, in fact, I just want to know, just to test it out, tell me that you hear what I'm saying, or that you see where the questions box is. Just type in, hey, got it, I'll put a question in here, or yes, I can hear you, or something like that. I just want to make sure people see where you can type in questions on the GoToWebinar platform. So if someone could just type something in there, that would be great. I would appreciate it. I would love to see that you can actually type in a question and that you're hearing me. And which also begets, if you're having any audio problems, in the event that someone's not hearing this and they're going, what is going on? Because this is delivered over the internet, just refresh your browser, and that'll often solve the problem with any audio issues that you may experience. Okay. Our new website. I'm actually going to start at the beginning. If you haven't seen it yet, and thank you everyone for typing in your responses. I appreciate that. It helps me out. We are excited. We just launched this brand new website over the weekend, and we like it. It's a it's a clean experience. We would love your feedback on it. So any place in there, if you wanted to provide feedback, email us, call us, everything. We would love to hear what you have to say. If you wanted to, you can even down here in the right-hand corner chat with us. We are accessible. But any feedback on the new platform is greatly appreciated. It is kind of clean, easy, to follow, finding our products, navigating around. Um, we're excited about it. The one thing I really wanted to show you right here is this contact button, which is the same as the slide I had put up there. We're here to help you on your journey. And one of the best ways that we can help you is if you call us, email us, chat with us, all questions, feedback. We love it. We love to hear the good feedback. Positive feedback is the best. But we also need to know what we could be doing better. And that is very important. We are here for you. We want to make your experience better. And one of the best ways for that to happen is for you to reach out to us and let us know. Um, and I do know that people are asking, this is a great question about a mobile app. We don't have a mobile app in the store, and that's for regulatory reasons. We couldn't keep it in the Apple Store, and there's some reasons around binary options in the Apple Store. But we do have PWA technology where if you're on our website, you can actually down. And you know what? I'm going to have to do a webinar on that, or I'm going to do a little tutorial to show you, and we'll put that up on our website on how you can make it an icon on your screen, and then so it will look and behave like an app. You would just go to our website and you would save it. It would create an icon on your screen, and then when you open the app, it would bring you right to the trading platform. So it acts like an app, but you don't download it from the mobile store. So stay tuned for that. In fact, I'm going to show you where I'm going to put that in our learning center. If you click on learning, we actually have some short, very brief tutorials here in our getting started section. And when you click on that, they're 2 minutes. In fact, I'm going to refresh all of these because our platform has changed a little bit since then. But I will add installing the PWA app on your phone, and I will do that shortly. I will do that as quickly as I can. That's a great point. I'd also like to point out, because we get this question every single time, is in our webinar section, you will see that we've got upcoming webinars, and you can register for any of our upcoming webinars. And we also have our archive. This session is being recorded. It will be put up in our archive, and you can go back and you can, on demand, watch any of our recorded content. And if I scroll to the bottom, you're going to see we've got pages of it. And in fact, this is a great time for me to plug. We did an education summit over the summer. There's 8 different sessions. It was over the course of 2 days. We also have all of this on YouTube. And I would recommend you subscribe to our YouTube channel, where if we do, you'll get notified whenever we add additional content. I mentioned that virtual education summit we did a month back. It's 8 different sessions. Day 1 was basic. Day 2 was more advanced. You can review those at your leisure. But this is also where you'll see our market updates. We have a weekly market update that happens every Tuesday, and that's a webinar you can register for, and it's an hour long. We do that with our partner, Brian Caprice, and he does some price action and looking for potential opportunities on all of Nadex's markets. And then our Chief Compliance Officer, Travis McGee, does a daily one that is just a quick little 1.5 to 2.5 minutes of what happened overnight, what might have happened in the markets, and what to look out for that particular day. So again, signing up for our YouTube channel could help, and you can take a quick look at those in the mornings to see what's coming up. All right, enough about that. I am going to go ahead and close, and I am going to go back to our homepage. And let me just take a quick look if there were any other. Okay, I think I answered most of the questions so far. Let's get into the thick of it. Up in the upper right-hand corner, I am now going to log into our platform. Notice, and this is actually also big. I mean, as we launched a new website, we are going to be pushing out the new Nadex platform. You can still log into the old platform. But we are going to be pushing everyone into the new platform. You will still be able to access the old platform probably for most of this year. But eventually we are going to sunset the old platform. That is because the new platform has much better usability. I know people hate change, but it's a cleaner experience and it's got more robust functionality. So eventually we're going to have people transition in. So let's go ahead and log in to trying the new Nadex platform. Might as well start getting you used to it. If you've never been here before, it's pretty clean. On the left-hand side are where you would find the different markets. On the bottom would be your positions, any orders that you've got, current positions, and if you wanted to quickly find your history. And then the workspace, which is where we're going to be spending most of our time today, which is the charts and the order tickets. All right, so I'm also going to do this. Let's make this a little bit bigger. I think that will also help. I'm trying to make it as big as I can so that you can follow along and see me. Now notice, I did log into a demo account. If you don't have a demo account, you can open a demo account. We do push our live prices into a demo environment. It doesn't always perfectly replicate the live markets. So sometimes data in the demo environment can be a little off. And the action and the interactions that you would get in a demo environment will be very different than a live environment. Because a live environment, there's a lot of people trading and looking to participate in those markets. They might not be in the demo environment doing the same. So it's important to note that I am in a demo environment. That is so I could put on some demonstration trades. But if you don't have one, it's a great way to get used to the platform and start learning where to click and setting things up how you want to set them up. It's also a way to do some practice trading. We find that if you're new to our markets, if you practice for a little bit, your experience when you go to the live markets will be better. So we encourage people to open a demo account before they jump immediately into the live markets. Okay, with that, here are our products: binary options, call spreads, and knockouts. I'm going to go backwards in reverse order. So we're going to go start with knockouts, and I am going to just pick one of our products. We do have them in indices, forex, and commodities. Let's go ahead, because the stock market seems to be a very popular thing for people to be talking about nowadays. For our knockouts, there is the US 500 or the S&P 500. There is the Russell 2000, the small caps, small and mid caps. The Tech 100, which is the NASDAQ, been pretty volatile as of late. And the Dow Jones Industrial Average, the Wall Street 30. I'm going to go ahead and just click on the top one. Let's take the S&P 500, and there will always be 4 knockouts. I am going to pick any one of them randomly because it almost doesn't matter. And I am going to go ahead and hide that. And I'm going to, down here, I'm going to hide that's the double blue lines. And I'm going to hide that. And I'm going to, what do we have? Let's go ahead and look at let's make it a 10-minute chart. This is fine. And what are we on? Let's put a week up. And let's move that to 10 minutes. Okay, this is a week at 10 minutes. That's great. Okay. Now, what is a knockout? And by the way, if you notice, this is the chart. There's a lot of functionality. We will get into that. If there's any specific things you'd like to see in our charts, type them into the questions and I'll try to get to them. And our order ticket on the right-hand side. First thing I'd like to point out is that you can have multiple charts and multiple order tickets open. If I had multiple screens to share with you, I would do that. I'm only on one screen. That's how this technology works. A lot of people will have 2 monitors or 3 monitors, and they will use tear off, and you can tear off a chart, and you can put that chart, and I tear it off, and it would open up a chart, and I'm not sure if that shows with you with the way this technology shares, but it would open up a chart, and I would be able to move it to the left screen, and I could open up an order ticket and put it right next to that chart. I could do the same and put another chart and an order ticket on the right hand screen, and I could still have a third chart and order ticket right here in front of me. So you could be, in theory, looking at 3 different markets or 3 different knockouts, whatever it is that you wanted to look at, and you could be following at the same time and be able to trade on each one of those without having to cycle through them in one place. Something that that's some great functionality we're excited to be able to add. Okay, now what is a knockout? Notice that there are always 4 knockouts, and they are indicated by the blue lines on the left-hand side of the chart. And I can switch between any one of these knockouts by simply clicking on that blue line, and it will change the knockout. When I do that, it gets rid of my order ticket, so I'm just going to open the order ticket back up so you can follow along. Now, a knockout, when you're trading a knockout, you are trading the price of the underlying. We call this a delta 1 product, meaning the price of the knockout moves in direct correlation to the price of the underlying. Now, we give you an indicative price of the underlying. It's here on our charts. It is even up here on the order ticket. We will also tell you when this particular knockout expires. They are always set as weekly, and that's okay because whenever, and we'll get into that in a second, there's no need for these to be shorter term. So it tells you when this will settle. It will settle at some point. It's the end of the week. And if you notice the prices that you can buy or sell, all right, and here in the S&P, 33.40, 33.90 are right around the indicative price, 33.60, 33.70. So you are trading the price of the underlying, and it will generally be around, the bid and the ask will be around the current indicative price. Now, can you put an order in between this? Yes. Do you have to trade on these prices? No. You're allowed to put a bid or an offer in between if you like. You can middle the market. Someone may or may not trade with you. Now, what is the knockout contract? A knockout contract has defined boundaries. So it sets up a trade where you have defined risk, defined reward before you enter the trade. In the S&P 500, there's a range, all right? They will always give you a floor, all right? The floor here is 3107 and a ceiling, 3157. It also says it on the order ticket. It is a 50-point range. The way that then translates to dollars is the maximum a contract could be worth is $500. Now, what is my risk and what is my reward? What am I actually trading? Well, we are right in the middle of the range right now. All right, we are right in the middle. And so if I were to buy or sell one of these, and right now I had clicked buy. All right, let's click buy, and notice how it put the price of 31.3410. So let's just take that and make that 31.34 even. Okay, and you can see how I just changed that on the order ticket. If I bought one of these at 31.34 because I thought it was going higher, if from here 31.34, and if I bought one and it went and it touched 31.57, I would get knocked out of my trade for a profit. I have essentially set my profit goal at $230. If it were to make it up here and touch this 31.57, I would get knocked out for a profit and I would make $230. If, however, I were wrong, all right, and it went against me, and it went down to 3107 and it touched the floor, I would get knocked out. That would be my stop loss level. And if it went down there, I would lose $270. I would get knocked out down here at 3107 and I would be out of the trade. I bought it. I was wrong. I can't lose any more than $270. My maximum loss is 270. My maximum gain is 230. That's a knockout. You're essentially setting up a trade where if it goes the way you want, you've got a defined profit, and if it goes against you, you've got a defined loss. Now, what happens if it doesn't touch either one of those boundaries in the time frame? Now this settles today, right? I was actually saying these are weekly contracts, but today is the last trading day. This will settle to 3 hours and 52 minutes. If it doesn't touch either one of these boundaries by the end of the day, the profit or loss on your trade would be the difference between where you bought it and where it settles. So if I had bought one at 31.34 and it settled higher than 31.34, I would have a partial profit. All right. If every point up, I would make, I would make some money, and if it made it up to 31.57, I would potentially make $230. All right, that's the maximum. But if it settled up between here, I would still have some type of partial profit. If it were to go down, as it's ticking down now a little bit, if I had bought one at 31.34, in fact, let's go ahead and place an order. I'm just going to do that for fun. Place an order. I placed one for, it told me my order was received. I am going to click on my orders down here, and you can see I've got a bid. Oh, and look at that. It went from an order to a position. So I actually ended up buying it. All right, remember, this is not a buy or sell recommendation. I just wanted to show you how that worked. I had placed an order between the bid-ask spread, and then eventually I actually got filled at that price, and now I have a position. I have a one lot. If it were to, and you can actually see if it were to go higher, I would have a potential. I'd have a partial profit. Makes it up here. I make my $230. If it trades down lower, I would lose money, but I couldn't lose any more than 270 if it actually went down through 3107 or touched 3107. Are there any questions about knockouts? You could go ahead and drop them in. They're pretty straightforward. The question is what knockout are you going to choose? I picked one where it was exactly in the middle. So, it's an equal probability that goes up or down, an equal, well, everything's got an equal probability of going up or down, but my potential profit and loss was set to be potentially the same. If I really thought it was going higher and I wanted to give myself more room to the upside and have less downside, I could just simply choose the next bracket higher. So if I were to choose this bracket, and let's take a look now, notice my range now is not 3107, and my floor is now 3117. Let's put 3134 where I bought that, just so you can see the difference. Now, had I traded one of these, instead of having a potential downside of 270, I've only got 170. I've limited my risk to the downside because I brought my floor higher. Now it's closer to the floor, so it might touch this, but it also gives me more room to run to the upside. So if I was really thinking it was going higher and I wanted to stop my loss a little sooner, I didn't want to risk 270. I was only willing to risk 170 in the event that I was wrong. Notice how it gives me more room to the upside to potentially profit. So this might be a better risk reward for you if you really thought it was going higher. You could even choose one where it's even closer. So let's choose this last one, the fourth knockout. Here we are very close to 31.27. Notice here that I'm only risking 84, but if I really thought we were going to rally into the end of the 4th of July, Independence Day holiday here in the States, if I really thought that was going to happen, I would give myself plenty of upside room and really limit my downside. But notice, if it touches 31.27, I would be knocked out. So if you actually look at this in the last, let's just make this, oops, I didn't want to do that. That's what I want. and just in today. All right, so I have just zoomed this chart into to today. Had I done this exact setup earlier, okay, I mean, it did rally up. I was right, and then it came back down. I would have been knocked out of the trade right here. And then it came back. All right, and now we're, I don't know where is this going to go. It's trending a little. It's just kind of hovering right here, going sideways. So had I done this earlier, I would have actually gotten knocked out of the trade, and even though it did go higher. This is an important note. Just because there's an expiration, so in 4 hours, or just because there are boundaries, does not mean I need to wait for it to touch one of those boundaries or for it to settle for me to decide what I want to do. All right, I bought one at 31.34, and I think it's going to go back up to this 31.50 level because it did it earlier today. I can certainly just take a small profit, and let's say I think it's going to go back up to 31.50 just for fun. All right, and I can place an order above. So if it actually makes it up to 31.50, I want to take a profit. I bought it at 31.34. I'd sell it at 31.50. I place my order. My order has been received. I'm going to open up. Oh, and I was on buy. See, there we go. I didn't want to buy one at 31.50. I wanted to sell one. Important to note, I mean, it was blue. Why did I do that? So let's buy that one back. Let's just buy that back. Okay, I'm going to put my, oh, and I'm on a, you know what? I'm actually on a different contract, by the way. So that's fine. That's actually even better. Actually, I bought 2 of those. No, so that's actually fine. I have 2 of these now. Remember, this is, and I don't know why I was, I forgot we were on, we had done a trade on a different contract. We had done it for the trade we did was on the 3107, 3157, and I was showing you the 3127, 3177. Important to note. All right, so on 3170, I bought 2 of these, and if it goes a little higher and it goes up to this 3150 level, I want to sell them back out. So I click on I click on sell, and I want to put an offer above the market. So 3150, I am selling. So it's important to make sure sell, I'm on red, blue, I'm on buy. Here I am selling, but I am putting one above the market, 3150, and I'm going to go ahead and place my order. Okay, my order's been received, and we can see that I have an offer above the market. All right, it's currently at 31.30, and here's my indicative price, and I want to sell it up here at 31.50, and we're down here at 31.35. Okay, so you can place an order to exit a trade early for a profit if you like, and I still have my, if it trades down to 31.27 on these 2 that I bought, I'd get knocked out. I'd have a small loss. That's okay. But I know my loss is limited, and I've got my exit strategy higher that does not have to be the ceiling. All right, if there's any questions around knockouts and around placing orders in knockouts or how knockouts work, and once a knockout is knocked out, that contract is over and we will relist another knockout automatically. So there will always be 4 knockouts for you to trade. All right, and just like we have them in our indices, all right, I'm going to go show you. We also have them in foreign exchange. All right, 4 of the most common pairs that are traded, as well as in commodities. People like to trade oil and gold. I don't think crude oil's been all of that volatile as of late. We do remember when oil got really crazy. Let's hide this. But if we look at a 1-day chart, and let's go ahead and make it 5 minutes, we can see that oil has not been all that volatile of a trade. But again, if you thought oil was going to do something, hey, maybe people thought oil was going to go higher going into the holiday because people are going to be driving more. I don't know, and people don't. You could take a position in oil where you bought it, and again, notice how it's still $500, but you've got your knockout ranges around it. Now, there were some questions around if we're going to add additional ranges to knockouts. I think 4 knockouts has actually been enough. If you thought that more ranges were necessary, or smaller ranges or wider ranges, give us the feedback. Again, use that contact number, use the chat, reach out to our folks. They document all that. If we have demand from our customers, we are always willing to consider what would make sense for our markets. We want to make sure that people have the opportunities to trade the products they're looking for. All right, that is knockouts. I am now going to just mention call spreads because call spreads are similar to knockouts. But with a knockout, notice how there is a clearly defined floor, a clearly defined ceiling, and if it touches the floor or the ceiling, you're knocked out of the trade. Most people prefer that kind of an interaction because you got a clear profit goal and a clear stop loss goal, and it's delta 1, meaning it trades. This is a small contract. I know, for instance, in oil, some people were trading futures, and these do settle to the futures. When oil went really crazy in some of the more traditional brokers, there was challenges around being able to trade them. The risk was unlimited. The amount of margin and money you had to put up was relatively large. These are small contracts, defined risk reward, and you couldn't lose any more than what you knew going into the trade, versus times when people were actually trading oil and then it went negative and no one realized, yes, the price of oil in a futures contract could go negative. We have found that in this defined risk reward environment and being a delta 1 product, it moves right with the price of the underlying, is something that's very appealing to retail customers, particularly if you don't want to have a lot of money at risk. Call spreads, on the other hand, are similar, but they're going to give you what I call optionality. Let's take a look at the crude oil daily contracts for our call spreads. And again, I'm just going to go ahead and pick one. And it also is going to have a range, and I'm going to zoom in so you can see. It's similar, right? It's got a range where it's got, and if I were to buy one of these, I mean, right now I've got no bid or ask, but if I want to buy one, it's got the same concept as knockouts, except if it touches one of the boundaries, you are not knocked out of the trade. If it settles above the ceiling, you will hit maximum profit. If it settles below the floor, you will recognize maximum loss. You can't make any more than your maximum profit, and you can't lose any more than your maximum loss. But what it does do, just like in earlier today for the S&P, in fact, that's actually probably a better example. I just want to show you. Let's go look at the S&P 500 daily. If you recall, let's just pick one of these, and gone by. There we go. And let's hide this. And this isn't, I wish I could find the one that was, here we go. Oh, you know what, they're different ranges. This was actually pretty close to the one we were looking at. Nope, this is way below. All right. Well, my point being here, because the ranges are not the same, the point being here is if it touches one of the boundaries, you're not knocked out. So for instance, earlier when I was showing you the S&P on the knockout, if you had bought it and it touched the bottom, you were knocked out. In a call spread, you wouldn't be knocked out. Your losses are limited, but you would still be in the trade, and it gives you more time to be right. Now, the difference here is you pay a premium for this. Notice here where the indicative price of the underlying 31.35 is above the bid or ask prices. There's a premium that you will experience, that you're going to either that will cost you to have. So it's not a delta one product. This will behave a little bit more like an equity option. There is time decay. I don't want to go fully into this. We do have some great courses. I would recommend take a look at our on-demand section of our website or on YouTube and look at the basics of call spreads. I'm pretty sure we've got something out there. I know we're going to be doing some coming up. But it's similar to a knockout but it has optionality. It has optionality, and there will be a premium associated with it. Okay. Next, let's take a look. All right, so I've done knockouts. I showed you call spreads, but I really binaries are a lot of fun. And then I want to spend some time on the platform. As a matter of fact, before we do binaries, because I like to finish with that because it's exciting. If you aren't familiar with binary options, we're actually going to watch one in action. We're going to do it. We have binary options in 5 minutes, which is our currencies. All right, we have 5-minute currencies. A lot of people like those with the price action. In 20 minutes, we have the indices. And then we've got, in all of our products, time frames, hours, daily, weekly. So again, now, what are these binary products? These are very small predictions. Every binary option, the maximum it can be worth is 100, and every contract will either settle at 100 or 0. That is why it is a binary. So let's take a look at indices. I am going to use the S&P 500 again. I'm going to go ahead. If I use my weekly and my daily, notice how they're the same because it's today. And I am going to pick one so we can populate a chart. All right, here is what we are looking at. Let's look at a 1-day chart. I am going to do this in 1 minute. All right, so we're going to get a nice little view here. Let's shrink these down so I can get a few different binary contracts on here. This is perfect. Notice how on our charts we give you each of the binary contracts right on the chart. And the prices that you see are the probability of the outcome being true or not. Okay, so let's say I think that the S&P is going to go higher. I have choices. I could buy a contract where it's trading 94, and it's got a 94% probability that, and let's click on that buy right now so I can show you on the order ticket. In fact, I am going to even make this a little bit bigger because I want you to be able to see it all a little bit better. In the next few hours, will the S&P 500 finish higher than 3117? And the answer is either yes or no. If it's yes and it's settle higher than, if it's yes, this contract will settle at 100. If it's no, it will settle at 0. So in the end, it is either 0 or 100. That is it. And I think people are kind of familiar with this concept. I don't want to equate it with gambling, but are the Bears going to beat the 49ers this weekend? Yes or no? And since every contract is only worth a maximum of $100, the risk or reward on a binary contract will always be $100. So if I were to say buy one at 94, if this were to be false, if the S&P were to settle below at 3117 or lower, because it has to be greater than for it to be yes. Notice this is greater than. So if it's exactly there, it ends up being false. this contract will go to zero and I will have risked $94 and I will lose it if it settles below 31.17 in the next 4 hours. If, however, it stays above, I could potentially make $6. So this is a high probability trade with very little risk potential. Probably one that you're not as interested in potentially trading. You know, with the potential profit being so small, but people do look for those little opportunities. As a matter of fact, while we were talking, I think the probability went at 87. You probably could have got this and potentially made $13, but you would have risked 87. Notice as we get closer to the actual price, the 31.29, now it's still got a high probability of finishing above 31.29. The market, and the way the market actually prices, if you took the middle of the bid-ask spread, it's around 73. The market's telling you there's a 73% chance it will settle higher. Okay, that's what the market's telling you. Not a lot of volatility. Maybe people think because it's going into a holiday weekend that not much is really going to happen here. So that's it. It's if you were to buy one here, you'd be risking 76 to potentially make 24. It's calculated. This is you get 3-to-1 odds here. Is really what you're looking at. Risk my 24 to potentially, risk my 75 to potentially make 1-to-3 odds. I'm sorry, 1-to-3 odds. If you wanted a higher potential payout, there's going to be a lower probability of you being true. You could potentially buy the 31.41. And notice how on our chart, it shows you where, in the blue, this would need to settle, not trade there, settle for me to potentially make a profit. Here, this is 3-to-1 odds. Here, I'm risking 33 to potentially make 66. Now, you could do it the other way. All right, I don't think, here's a high one, here's an out of the money one up here, 31.53. I think we could rally, but we are not going to settle above 31.53. We're at 31.34. I don't think we're going to settle above here. I could sell this one. All right, I could potentially sell this one for, let's just pick the middle price of 20. So it's nice and easy. I put a 20 in there. Now, it needs to settle below here. It could be 31.53 or lower. This will settle at 0. If I were to sell one at 20, and let's go ahead and place an order. All right, I placed my order to sell. There's my offer at 20. We can see my order down here. I'm offering one of these at 20. Let's go ahead and close that. If someone were to buy this, remember this is a demo environment. I don't know if someone's going to buy it from me. But if I were to sell one, I potentially make $20. This rallies and it goes up, but it doesn't settle above 31.53. I collect my $20, but if it settles above 31.53, because it could go to 100, I could potentially lose 80. So again, a higher probability trade for me to potentially make $20 if someone were to buy it from me. Remember, I'm demo environment and I'm between markets. But it could rally. I could still make $20 on this, and if it rallied, I would still make money on my other positions where I've gone long. So it's kind of interesting how in my knockouts, I've taken a long position and I want it to go up, and I've taken a similar position, I've taken a contra position in binaries where I want it to go up, I just don't want it to go up too far to potentially, make $20. All right, and I'm going to take a quick little peek because I want to make sure I didn't confuse anyone that. Now, this is also very important. If, remember, I don't have to wait until settlement or expiration in order to trade out of a trade. If I were to sell one of these at 20 and I could buy it back for 10, I could put a bid in, and if it went down to 10 as time went on, I could buy it back. And so instead of making 20, I would only make 10 because I bought it back. You can always try to trade out of your trade. You can do that either to lock in profits, or you can also do it to minimize losses if it's going against you. Now, what I would like to do is I'm going to show you a 5-minute binary. We're going to actually do one of these, again, a demo environment, because I want you to see the price action that happens when you're, and here, let's just pick the Euro US dollar, and I'm going to pick one. It doesn't really matter. It's the at the money one. Let's get this away. This settles in 4 minutes. All right, and I am going to, we are on a 1-day chart, and I want to do a 1 minute, and I'm going to open this up, and I'm going to watch. Let's shrink this down. All right, now this will all play out in the next 3 minutes and 40 seconds. All right, we've got to stop. It's like watching a horse race. The probability right here of it being above 112.29 is right around 50. All right, notice how we're right now. It's a little below 50. All right, the indicative price is right here, and as it trades, let's move the chart over. As it trades below, notice how the probabilities on this start going lower. In fact, this one that was up in the 90s is now, as we tick lower, the probability of this starts ticking down. If I think it's all right, now it's going to move around. It has to go, every one of these will go to 0 or 100. So if I think it's going to keep going higher, maybe I want to buy one of these. All right, so let's just try to buy one. I think I just bought one at, oh, nope, I didn't. I tried to buy it at 64. There's my bid, and it's ticking higher. This is the trick, right? Let's make it 64. Let's make it 65. And it's kind of crazy because I'm trying to buy one and it keeps ticking higher. Let's just make it a market order. Oh wait, I want to amend my order. Let's make it okay, there we go. I bought one. So we've got 2 minutes and 10 seconds to see what's going to happen. All right, and you can see in my positions that I actually bought one and it's trading lower now, okay? I bought it higher because I thought it was going to continue going higher. Now, what can I do? I'm going to watch. We got 1 minute and 52 seconds. It's trading lower. Now I'm getting, was I wrong? Is it going to keep going lower? Do I have to take my losses? And the answer is no. I can always sell this right back out and take a partial loss. I've got to make a determination. What do I think it's going to do? Notice how the probability up here, around 15% probabilities. These will, as we get closer, hone in on 0 up above and 100 down below. And the volatility and the price action of these will be pretty dramatic. Here we go lower. I had an opportunity to trade out of it. And as it trades lower, I still have 1 minute and 8 seconds. So I don't know what's going to happen here. What do? I don't know. All right, you know what? I'm not comfortable with it. Let's go ahead and sell it. And I sold it. Okay, I got out. I said I took my lumps. Notice my positions, it's gone. You can look at my history. I went ahead and sold it at 30, all right, because I wasn't comfortable with it. So I took a partial loss. Okay, and you're allowed to do that. I could have done the same for a partial profit. I do want to see what's going to happen in the next 33 seconds. There's not, the volatility in here has kind of been slow. As we get into the last 20 seconds, prices are going to go blank, right? And the reason that happens is because these are all going to be 0 or 100 in the next 18 seconds. All right, I don't know. Nobody knows. People get uncomfortable. We're following our indicative price. It's been below. Right now it looks like it's going to be 0, and it settled. And look at that. Oh no, 3, 2, 1. Look at that. It's stuck right here at this price, but it settled below. It went to 0. That thing, this 112.20, 112.29. I'm glad I sold it at 30 because it went to 0. I saved myself $30. Had it settled just above, I would have gone, why didn't I keep it? So you can trade out of a position if you're not comfortable with the risk that you're taking, or if you want to lock in the profits. Okay, and after that expired, All right, I'm going to click on this one because it's the same one. Notice how the clock, uh, it reset in the system, but it did show me what had happened. It said it was expired, and now there's a new one, and I could play this game again. And we're watching, and we can watch the probabilities. The one down here did go to 100. The one up here, these all went to 0. In fact, the one I was looking at also went to 0. And here we have another 4-minute horse race. All right, those are binary options. Lots. All right. uh, Okay, and I do know. I'm trying to take a look at some of the questions. Let's just take a look. All right, someone's asking. Let's take a look at the 20. Oh, you know what? Someone asked for 20 minutes in the peso. Our 20-minute contracts are only in indices, but if I were to go to my forex, I do have. Let's roll down to the Mexican peso. We love that we launched the Mexican peso, an emerging market pair. And again, I'm in a demo environment, but we don't. We've got one here that actually would settle in the next 9 minutes. And if we take a look, let's click on that one. And here we go. I'm going to spread this out a little bit. And again, we are looking at a 1-day chart. Let's make it 1 minute. Why not? And as I spread this out, this is the Mexican peso. And here you have it where you can watch, okay, what's going on. Here's my, this is the at the money, the one I had clicked on. And this has 7 minutes to go. And you can watch the probabilities as they move between 0 and 100 with the probability of the statement being true. And if you think it's going to be true, you buy. If you think it's going to be false, you sell. Now what I'd like to do, I know I've gone a little longer than I would normally go, but I want to show you some functionality in our charts. So we don't have all the volatility. I'm going to stick with Forex. Let's go and let's take a look at the Mexican peso, and I'm going to go to a weekly chart, a weekly contract, and we'll do it on we'll stay with the peso. Why not? That's kind of fun. I'm a big fan of the south of the border. I'm actually going to go ahead and move my order ticket over because I just want to show the chart. And I'm going to do a little bit larger chart. So let's go ahead and take a look at what's happened over the course of the last week. And an hourly chart is sufficient. You know what? We're just going to do this and we're going to leave it. It appears that the peso, rallied earlier in the week and now has sold off. This is some of the functionality that we've got in our charts for you to do some analysis yourself. We've got up here, not in the date range, indicators. We've got, I believe, 37 different technical indicators that you can pre-populate on your chart. All right. If you're not familiar with any of these we've got built-in education for you to learn what these different indicators mean. Okay, so they do help you. If you want to put them on the chart, they will properly display, and then you can customize any one of them. So for instance, some people like to use Bollinger Bands. I'm just going to go ahead, and if you weren't familiar with what they are, it's about trying to see some potential support and resistance based on standard deviation, some math. I'm going to click on Bollinger Bands, and they will populate them on the chart for you. If you want to customize your settings, they're down here. I click on this and I can either change the period, I could change the number of standard deviations, I can change how it displays. I'm just going to leave the custom ones up here, and a lot of things what people are looking at for Bollinger Bands is that you would eventually see a revert to the mean, meaning it would go from if it were down in a lower range, eventually you'd want to, you think it would move back up towards its mean, but it's clearly been in a downtrend and it hasn't necessarily done that. So maybe that wasn't such a great indicator here as trying to identify opportunities to potentially buy it. Every time that it did touch, it did kind of go flat, but then sold off again. It touched again and it went sideways again. And then it went, so every time it did touch the bottom of a Bollinger Band, people did come in thinking it was an opportunity and they bought, and it went sideways, and then there was clearly a seller that kept coming in. And it wasn't until all the way down here where that actually worked, where when it hit it, you bought it and it did rally some, but it looks like it may, I don't know. Again, not buy, sell, or hold recommendations, but just wanted to show you that we have some tools that are available to indicators to help you along your journey. We've also got drawings. This is this little button, this little icon here, where you can try to put in, all right, maybe you see that downward channel. Let's go ahead and put that channel in there. I'm gonna click on channel, and we've seen this channel. It's kind of gone from here, and I'm just gonna kind of pick the top end of the channel. I click again, and then it has stayed in this little channel. Here, where maybe that gave you some ideas when it did get, here it touched the bottom of the channel if you bought, eventually it went sideways, but then it hit the top of the channel. That's where you'd want to sell. And that actually, the top of these channels turned out to be selling opportunities all the way down. So when you're in a downward momentum, that top of the channel tends to act as resistance. And if it were ever to break through that, it might be a turning point where then that would become support. But in this downward channel, every time it's touched, it's been an opportunity to potentially sell. And if you sold, whether you sold a knockout or a call spread, or you sold a binary, you could have always just, bought it back when you saw that it was at a level where you saw support. So you didn't have to stay in each trade until settlement or until a knockout hit a boundary. You can always do these trades kind of short term, where if it goes against you, you can limit your losses and just go ahead and say, oops, I was wrong. Sort of like I did in that 5-minute example where I was wrong, I got out, I limited my losses. Or you lock in profits. Hey, I'm right. I don't have to be right all the way. Let's go ahead and take something off the table, reassess. And you're always going to be reassessing as you go about doing your trading. And a channel here is a perfect example where you might be getting in and out because the indicator you're using is kind of telling you different places. Again, nothing buy, sell, or hold, all just for your education. The other indicator I like to show just for fun, because Fibonacci is one that a lot of people look at, Fibonacci retracement, and it's a similar way. I'm going to do a trend. I see it's in a downtrend. I'm going to click on the upper end of the trend. I'm going to, actually, you know what? I want to do that right through the middle of the trend. So, and let's get rid of now let's go ahead and we'll leave it. We'll leave that on there. Let's go ahead for Fibonacci retracement. I'm going to do it right through the middle. Start at the top end, and I'm in a downtrend, so I'm drawing it an arrow down. Okay, so I'm showing my downtrend, and I click in the bottom right where I'm down, and it will draw the Fibonacci levels. And if you're not familiar with Fibonacci, it's a mathematical calculation that, for ratios that you tend to see in nature, and it puts them right on the chart. And you can see up here when it did hit this first Fibonacci level, it did act as a support level. It went pretty much straight through the second one, but when it hit this one down here, the 50%, it also acted as a support. And it's really kind of amazing how when it broke through that, it went straight through the third, and it went all the way down right here to this 20 to the 23.6 retracement. So I mean, it's interesting how people tend to see these, and other people are using that as indicator levels for potential opportunities to buy or sell. With that, I definitely went over a little bit today. I want to encourage you again. This is recorded. I will put the recording up. You'll find it either on YouTube or on our website. I would encourage you again to play with our demo platform, particularly if you're not familiar with the new setup. I think someone had a question around how we numbered different products, knockout 1, 2, 3, 4, where we don't have them numbered any longer. You're actually just going to be using the actual level. So instead of talking about a number that's actually kind of irrelevant, for instance, on our knockout, let's just take a look at binary options on our indices. And I'm going to bring up the US 500. Instead of seeing a number Oh, and see, we're in a demo environment and the data just went kind of strange. Because we're in a, okay, yep. Here, like for instance, here's the DAX. We're not actually looking at numbers. You're actually going to look at levels. So instead of saying binary 6, it's binary. It's the 12,582, or the 582. So you're talking about an actual price that's a meaningful number versus an assigned number. So it's a little bit more clean and distinctive and clear on what you're actually talking about. All right, with that, again, I would also encourage you to contact us. Please, we love your feedback. We love your feedback. Please email us, reach out to our customer service, call us, chat with us. The more we get from you, the better we can make this experience for you. I want everyone to have a safe, sane, wonderful Independence Day celebration, and good luck in the markets. Thanks, everyone.